Welcome back, traders and investors. We have Chris Vermeulen on the line, founder of AlgoTrades Systems. He's an internationally recognized market technical analyst and trader. He's been involved in the markets since 1997. He does a lot of research. It's helped thousands of investors around the world design automated algorithmic trading for the S&P 500 index. Chris, how you doing today?
I'm great, Joel. Thanks for having me on the show.
And you're not the Chris Vermeulen that is the race car driver, correct?
I am not. No. I get that question quite often. People will email me and say, I can't believe you can trade and race and do all that stuff. And I'm like, that's not me, but I wish.
Yeah, because I was doing some research on you. So I tell you, I'm looking forward to talking to you because are all your systems designed for the S&P 500 index futures?
No, just my one main investing system. The AlgoTrades system is it's just for the SP 500 futures. It trades multiple strategies on it, and I do have another one for the Nasdaq. But really, those are the two indexes that I really trade with systems.
Okay, we'll back it up a little bit and let's find out about your education and your background in the markets, how you ended up doing what you're doing.
Yeah, well, I got addicted to the markets watching CNBC back in college, and from there, I just instantly decided I wanted to become a full-time trader. I'm a numbers guy. I've born and raised in an entrepreneur family, and I just wanted to start my own business and get trading online and just do everything online. So I got hooked into trading. Obviously, I read a book by Larry Williams, a little pamphlet that actually my father had got in the mail, and reading about futures, and I was hooked. I read this little book several times, instantly wanted to become a futures trader, and of course I was only at the time when I read that I was only 16 years of age, so of course I couldn't even trade for a while. So I learned and read books by John Murphy, all those guys, and as soon as I turned 18, I opened my brokerage account and I started trading, and I traded all through college, and kind of learned the hard way. I had some really big winners right off the hop, and lucky enough that I pulled money off the table and took a bunch of seminars on trading and took some courses and things like that. But slowly evolved into turning into newsletters and sharing my trades with other traders, and built a relatively large following. And of course, you run into all these obstacles as you're trying to learn to trade. Trading is much harder than most people ever imagine. Usually, if it doesn't take all your money, it takes all your self-pride and confidence. It's, trading the markets is just unbelievable what it can do to a person. And I'm at the point where I try and help as many traders as I can through just emails. I do a lot of phone calls and I run newsletters.
Great.
But yeah, sorry. Go on.
No, that's okay. So do you have a mathematical background?
I don't, not really. I just love math. I used to just literally when I was younger, I used to work in a factory through the summers through college, and I would literally just sit there and do long equation, division, and all these numbers, and just play with numbers. I just love numbers. So
Okay, so why is it so hard for traders to make consistent profits?
well, you know what? There's a couple key things. Like there's four things that most traders struggle with and they just can't get over. And like the first one is obviously most people just don't have a proven strategy, and they don't know what time frame to use, if they should be day trading or swing trading or trend trading. And not having a strategy is the number one problem. And so people bounce around, and you get into a trade that on a specific strategy and it goes in your favor right away, and you get all excited, and then boom, it reverses and goes against you, and your winning trade that you happen to just nail the perfect timing is now a losing trade. So not having a strategy figured out is the number one problem people have. And of course, within the strategy, you've got to understand proper money and position management, when to take partial profits, where to put your protective stops, your position sizes, things like that. And of course, if you don't have those, you don't have the self-discipline to follow a strategy, because you're really just total discretionary. You're just drifting around without a real set of plans. And so I think the key to success in the market is to understand the core foundation of it. You have to understand that the markets are unpredictable. Like, you just never know how long a move is going to go in one direction, and at any point in time it could change direction. People who are successful in the market, they're not really predicting where the market is going. They are, in a very short period of time, but they never know how far that move is going to go. And when you break the markets down, the market is fractal. It's fractal in price and speed. So if you look at the different speeds in the market, there's three speeds. You've got like momentum thrusts and surges in the market, which if, for example, you were looking at the daily chart, say you overlay a 3-day moving average on the price. So the 3-day is a nice smooth line of, say, the SP 500. If you zoom out a bit, that moving average disappears and you just get a fuzzy line. And that's the every day's high and low bar on top of that moving average. And I call those like the momentum thrusts. From the lows to the highs, that's the average momentum that the market has. It's just the noise in the market. So you've got to be able to have a system that can catch those quick moves. And then on top of that, when you layer it on, the price now starts to have more or less bounces and zigs and zags on the charts. Those are like swings in the market. And you've got to have a strategy that can catch the swings also. And those are more or less your ideal trades. They're not quite as accurate as a momentum style strategy because the momentum strategy is very quick and is very consistent. There's a certain amount of noise or percentage the market moves up and down on a regular basis. You can get in, you can get out, you can get in, you can get out. When it comes to swings, they're not quite as accurate, but they're much larger. You get a much better risk-reward ratio. So you've got to have a strategy that can capture the swings. And then on top of it, you've also got to have a trend trading strategy because you never know how long that move is going to actually go for. It could just roll right over, or it could extend on for several months. So my whole strategy, all my strategies, it doesn't matter if it's my day trading strategy, my swing trading strategy, they use all these different price speed strategies within that one's kind of system. So for example, usually when I'm trading the SP 500, I'll be trading 3 contracts. The first contract is just a momentum thrust, more or less, trade. When the system gets into the trade, you get that first kind of whipsaw or thrust in the market up to the upper range. Boom, first contract comes off. Now you've locked in some gains, reduced your risk. Protective stop goes to break even. If the market is favorable and you're playing with the underlying trend, you get the second move up a few days later, which is the swing trade. You know that second contract comes off, you lock in more. That third contract is just a runner. If the market continues to trend and keep going, you've got a trailing stop, and you can catch that move. And the thing with momentum strategies, because they're highly accurate. So you get a lot of these just first contract. You just keep making your anywhere from $500 to $1,000 a contract on these quick thrusts in the market. And the other 2 contracts always get stopped out. But just because the market is always kind of rolling over, but those accurate trades are the ones that chip you. You just like keep chipping closer and closer, making more and more money. And then occasionally you catch the nice swings, and then you catch the big trends. And it gives you a full spectrum of the market. You get to constantly be involved. Your account slowly keeps growing, and you're really catching all 3 trends.
Okay, so your models, from what you're speaking, how you're speaking, your models are almost based on all technical analysis. Do you throw any fundamentals in there? And then just to follow up on that, what kind of charts do you use, and what kind of technical analysis techniques do you employ?
Yeah, I'm strictly just technical analysis, and when I'm trading the SP 500 or on my swing trading strategy, I use the daily chart and I use the 30-minute chart. And really it's simply like the momentum thrusts are simple. They're like a volatility, like a standard deviation type play. So it's almost like throwing like a Bollinger Band on, and as long as the trend of the market is up, then you can literally pick up shares, or contracts when the market has pulled back, and it's tagged the lower Bollinger Band. That's more or less the average, the low end of your momentum kind of thrust. So you can pick it up there. When it jumps up and hits the upper end of the band, obviously that's where you want to peel a contract off, lock in gains. And so I just use simple technical analysis. I use the 20-day moving average. I use as a really key filter for identifying the market trend. I do use cycle analysis, so I have a spectrum analyzer. I run back on the charts, and it picks up the most active cycles in the market. I use 3 different cycles. One of them is actually the momentum cycle, one of them is a short-term cycle, and the other one is the actual trend cycle. And of course, everything has to be in line. The 20-day moving average has to be in line with the trend cycle. They both have to be trending up for the trend to be up. And if they're mixed signals, then I don't do any trades whatsoever. If they're both trending down, then I'll actually be looking just to short the market.
And are you using the data from the 24-hour Globex market? This is something I debate with traders all the time. You do have the extended trading hours. Basically, the S&P is trading almost 24 hours from 6 p.m. Sunday until it's Friday 5:15 close. Do you incorporate the full data, or do you just tend to concentrate on the regular session?
Yeah, that's a good question. I heard you talking to Ezra about that too, and I'm the complete opposite as how he trades. He's a high frequency trader. He trades 24/7. I actually am a low frequency trader. I look for literally anywhere from 30 to about 50 trades a year with the SP 500 as a swing trading strategy. And I only use regular trading hours for the SP 500 futures for that strategy. Now, that being said, the protective stops in the system, they run 24/7. So if the market starts to sell off overnight, then I want to get taken out. I don't want to get taken out a huge gap down the next morning. I want to get taken out as it runs through my protective stop. So it reduces risk that way. But for profit taking, I don't use the after hours or pre-market kind of 24-hour trading for the SP 500, because as long as you're trading with the underlying trend, it's shown that instead of having my profit targets getting taken off in the middle of the night as price runs up, there's a better chance that the market's going to gap up way above my target, and I actually squeeze out a few more points for those profit targets when that happens. So because I'm trading with the trend, I don't want to use the 24-hour charts for profit targets, only use it for stops.
Ah, that's interesting. So are you like completely black box, gray box? How much, I mean, besides your systems, how much discretion do you use in your trading?
I almost strictly trade pretty much all automated now. I do like to throw in some day trades. I watch the SP 500, or I'll watch the occasional sector ETF, and I'll throw off a quick trade here and there, or do like a VIX trade or something like that. But that's just to more or less satisfy a short-term, urge of trading. I do like to still pull the trigger as opposed to a robot doing it all the time. But
Yep.
they're literally just an intraday type of play. I just like to get active every now and then.
Okay, and just tell us a little bit about the services that you offer in case people are interested in following you on Twitter or checking out your website. What because it says you've helped thousands of traders. That's sounds like a pretty good thing you got going there. Just tell our investors how they can contact you and perhaps make use of your resources.
Yeah, if you go to thetechnicaltraders.com, there we run several newsletters. I have a couple partners. We run a options trading newsletter. We have a market forecasting newsletter, a small cap stock trading newsletter. I've got the Golden Oil Guy, which is my main newsletter that I've run since more or less college. And so all those are trading alert services depending on your style. We do, each of them is usually educational. We do videos in all the newsletters. And so you can go to thetechnicaltraders.com to learn more.
Okay, we've had Chris Vermeulen on the line, and he is a technical trader extraordinaire, founder of AlgoTrades systems, and willing to help people out interpret the markets, especially these difficult markets. But Chris, you seem to be doing a good job of it. Thanks for coming on the show, and we'd like to have you on again.
Thanks, Joel. That was great.
Okay.
Take care.